MMTs, as we let our calls run much higher here, the 595s are running higher, the 600s are running higher up at 380. They made a high of 1173, the 620 call. These are all the ones that we did today about how that breakout would happen. But most importantly is that how we had covered together that weekly breakout would go up at least 3 half deltas. And in yesterday's live training, 3 half deltas is $3.60 per half delta times 3. Well, if you go 3.66 times 3, that equals $10.98. And we had 3 half delta breakout, and that also was part of the training, would meet our requirement to stay in the investment, and it had to be a requirement that would be met. And in Sunday, 11/6 of 2011, in Sunday's training, we went over it. And same thing on 11/5. We went over it. Now, does the volatility, the price volatility downside days, meaning the markdown days don't come, but rather markup days, the opposite of what they've been doing for several days and several weeks and months, and how Google had underperformed 2010 and 11, but then why did SMF say over a month ago that Google would outperform its peers in 2012, even though that economies are going to be extremely weak worldwide and things of this nature? And where does the asset start to see the maturity level from its earnings, and how its business models, its composite, its margins, and everything else that's included in there is how have they set everything up? And once you get a weekly breakout, how many weeks do you get out of a weekly breakout? And what was your plan in being in it to start with? And for the people that are forward looking into the next couple of quarters of earnings would know that the head count and all the stuff that Wall Street has led it to be hasn't turned out to be the case. And we'll be covering that. So here we are. Okay, so basically 1580 on that, 1119, $600 call breakout, 740 on the low. How nice it was. Marked it down to buy it, and then they ran it. And so, Tom, what you're going to do is put out one contract on a limit out at 1660, only one, and a good till cancel order. If everything keeps going the right way, these contracts are 2270 up here now. And with the weekly breakout that we called for, and everything is working the way that it should, you could hold on to that other contract and throw out a good till cancel order up here at, let's say, 2210 or 2190. 2190 is a good number. Okay, of course you'll have to break the 60850 over here, and the name would have to continue its weekly adventurous breakout with 344 intraday highs. And so when we were at that point in time inflated, they came down to the deflated area, and as Google started to act better technically, they marked them back up. So they'd marked them down here, all the way down here, right, Tom? And they've marked them up before like that too, and look what's happened. So we can have a limit order out at 1660, and we'll continue to monitor this one to see, and a good till cancel order at 2190 on the other one. That's with this name gapping up in the morning and continuing its move higher, and you would have to move another delta and a half in the stock, and that would take this trade to eventually over time. Let me see what it would take us to. It would take us to, wow, it would take us to a very nice number. And that next area, when we break through that 610.76, that's 2 full deltas. 2.5 deltas is 614.42. And that's exactly where we would look for either a gap up to in the morning, or it gaps up and runs up and hits those highs, just as it did from 592.23 to 608.50. You were here during this whole breakout. What was that like for you, Tom? Right. But you're actually in the trade. You had trained for that breakout, didn't you? Because well, you knew that this double top over here, this old double top reversals, you know, and left elbow was where it started making its way, but right in here, once you took that out right here, once you took out these highs right here, these old highs that had reversals to them right here today, you just simply you just broke right out, didn't you? And that's because of that weekly what? That's right. And you've learned a lot about that in your apprenticeship? Well, yeah, it will still have its normal pullbacks and it will still continue to have its normal volatility. What counts is mathematically, Tom, is that once this breaks higher, you see how all the diamonds went up there? Wow. So as we build higher strength, we would look for the lows to be we knew that we had to get that through that 603 area. So our low support area is going to be 603.45. That would be the drop down, and that's where they would come in again and then run it and make higher highs. Okay? The put options that we're looking at, so here's a call option chart. Here's this right here. Remember, when a call option runs through on breakouts, they leveraged this up. They marked the call up, just like they marked the put down. Last week they marked them down, not during the trading day. Overnight they marked them down when everyone was asleep. But now that's marking this up, and you're in it to win it.